It's 2026 and the market is changing rapidly right now, and we've got to stay ahead of it. And to do that, I've decided to invite Kelly Fry back onto the podcast.
Great
So
to
Kelly,
be here.
welcome back to the podcast. Kelly and I have been chopping it up in the office, and we've had some pretty deep discussions, and we decided, you know, what better way to take some of these discussions, put them online, so you guys can get a sense of what we're feeling out there in the market. So Kelly, what I've done is I've prepared a number of questions that I want to have a conversation with you, and we're just going to kind of see where it leads us in terms of what we're going to do. Now, the focus is obviously going to be on buyers and sellers and investors, but we're going to go, you know, probably several major topics that you guys need to know going into 2026 in order to succeed for whichever route you guys want to go. So Kelly, you ready?
I'm ready.
All right, excellent. So first and foremost, I mean, welcome back. Let's talk about buyers maybe to start, because we've been hearing a lot in the news. A lot of agents are talking about it. It's a really good buyer's market. So what's your perspective on it right now? What's going on in the market for buyers?
Well, for buyers, I mean, I don't even remember when there was such a good time as right now. I mean, sellers are very beat up. They're dropping their prices. The ones that are motivated, the ones that have illnesses, job loss, divorce, that really have to sell are just honestly dropping their prices repeatedly. And buyers are sitting there, they're taking their time, they're being selective, they're negotiating on inspections, and of course rates have come down. And so, you know, it's really a win-win for buyers.
What are you seeing though as like the biggest mistakes that some of the buyers are making out there right now? Because while it is a good time to buy, we are still seeing that there's a lot of fence sitting. So what are some of the common mistakes you're seeing buyers making in the market right now?
Well, I think that buyers, if they're not guided properly, when a good deal comes along, they're being affected by the media and the idea that they can lowball everything, extreme lowballing, which of course then just puts the sellers back up, and then you don't have rapport, and then it's impossible to put a deal together. So they have to be reasonable. At the end of the day, if a property is well priced to begin with and it shows very well, then there's no reason to go crazy on an excessive lowball. You know, recognize the value that's there, and don't be afraid. I mean, some buyers are afraid because they've seen a declining market for over 6 months now, and they're afraid that if they buy, it might continue to decline.
For a while, and the other issue that I've noticed, and I've been working with a few first-time home buyers right now, is some buyers are almost being too picky, right? You know, it's the classic adage, like you're not, especially if you're a first-time home buyer, you're not buying your dream home out of the gate. And I think part of it is also because there's so much inventory right now.
It's confusing them.
Exactly. It's confusing them. They feel like they have to see everything on the market because it's that what if scenario right now. Like, what if a better one comes on the market, right? What if something we like more hits the market tomorrow? And I think that's partly what we have to make sure that if you're a buyer right now, there's always going to be that what if. If you find a property that does check the most amount of boxes, take action on it, because if you wait, you might not actually get that property you like.
And also, just an experience that happened on one of my great listings, there was a buyer that had it tied up. They had their place on the market, but they were not dropping their price fast enough. So we lost our patience, we took another offer, and of course, they ultimately lost the home that they really wanted because they weren't willing to take the hit at their end. And so they have to adjust. I mean, people are going to lose on the sales side, but they're going to gain on the buy side.
Now, obviously, the big topic, you see it in the headlines, you see it everywhere now, is what's going on with the sellers, right? And we're seeing it constantly. You know, all these mistakes that sellers are making. In fact, you know, we've got sellers literally canceling listings because they think it's going to be better in the future. And you know, we hear the constant adage, I want to wait till the springtime. So what's going on with sellers? Like what do sellers need to know to actually succeed going into 2026 here? And like maybe touch on the spring market and why you don't think it's going to be that strong of a market for sellers.
Well, I mean, you know, it's always a very competitive time in the spring. People are under this idea that everybody's going to buy in the spring. And so they don't realize that there's a lot more competition at that time. Now we're coming into the spring very shortly here where we're at a 10-year high of inventory. So if anything, it's going to be a race to the bottom. There's no sign that there's going to be any kind of significant increase. The economy is not that stable. There's so much uncertainty with so many factors at the moment. And so I think they're kidding themselves because they're hanging on to 2021 and 2022 peak pricing. And that is just not the reality today.
Well, and a big shocker just happened with the property assessments, especially in the detached market, right? We have seen, in some cases, 6-figure drops in property values right now.
Yeah.
And the biggest issue that we've probably both seen is that sellers are continuing to say, like, I want to get close to my tax assessment. I want to get close to my tax assessment. I actually made a prediction in the November podcast talking exactly about this, how I said, all these sellers who are holding on to a price up here and buyers are paying right down here, suddenly it's going to be, well, property value on the assessment is going to be here and buyers are going to readjust their pricing expectations. Because right now, buyers don't expect to pay over tax assessment.
Oh, no, definitely not.
So that's a major issue. What have you seen since, we are now 9 days into January? What has the response been from some of the sellers you're talking to in regards to that?
Well, I mean, in some cases it's gone up and in some cases it's gone down. And so for those that it's gone down for, it's a harsh reality that this is what we're working with. Mm-hmm. And for the ones that have gone up, they're confused as well, thinking suddenly that, for some reason it's going to be better in the spring, because everybody thinks they're getting a deal if it's substantially lower than the assessment. So they think, oh, we better wait till the market improves.
Well, let's go on that for a second.
I don't agree with at all.
No, I agree. I agree that you don't agree. And let's talk about that. Why is waiting till the spring maybe the kiss of death for a lot of these owners' equity right now?
Well, because as more and more people put their properties on the market, and we are seeing people that are coming out of the COVID era with rates that are about to spike, we're going to see more and more foreclosures, people that can't hang on. We have clients right now that are in pre-foreclosure. So they're just going to be dumping their properties to get out. Yeah. And, that's just going to, buyers are going to pick the best deals. Yeah.
Now I want to talk a little bit about what you just said with the foreclosures and the fact that we're going to see more happening. Mm-hmm. And this is one of those discussions you and I have had kind of back and forth a little bit. And I agree we are going to see an increase in foreclosures, but I think there's a big disconnect in society where suddenly we're expecting to see 2008 U.S. foreclosures happen.
Oh no, yeah. I mean, we have much more stringent lending. Mm-hmm. And we have stress testing in our lending, which factors in rate increases. But other things have happened to people. People have overspent or their jobs have been lost. Different things have contributed. It just means that that's going to be a higher foreclosure rate, but it'll be nothing like the U.S.
Yeah, exactly. And I think if you're a buyer and you're waiting for that bubble burst to crash, keep in mind that even when people were getting interest rates at 2.2% or 2.3%, the interest rates are going up to around 4 to 4.25 right now. I've seen some clients get slightly under 4. So really it's going up 2%. But if they had bought and they were wise with their money, they didn't change their spending habits from the time they had purchased, they were stress tested plus 2% anyways.
Yes.
So they have been, basically the bank has said, we know you can handle payments if it goes up another 2%. So unlike when we saw rates a year and a half ago when they were 6%, that's a whole other story. We're in that situation now where, yes, people's rates are going to start going up on their renewals. However, as long as their personal circumstances hasn't drastically changed, whether they took on a significant amount of debt or they had a job change or something else like that, they'll feel the pinch, but we're not necessarily going to see that significant mass foreclosure.
No, and I've talked to people who are considerably older who've gone through difficult times in the past, like in the 80s when rates spiked so high. And they basically went out and got nighttime jobs and did whatever they needed to do to hang on to their homes.
Yeah.
And, now with Uber Eats and all these other opportunities for bringing in income, people can hang on.
For sure. I mean, yeah, if you do have concerns, then, either lose the property, which is, the worst scenario, or be proactive. Right? Go out and get that side hustle. Start that second job that you were thinking of. Do anything that you can do to increase your income to be able to afford those increased payments. And just recognize that this is the new norm. And I think this is an issue with some of the buyers too, is I constantly hear it, oh, rates are so high, rates are so high. They're not high.
No, especially high ratio rates right now are as low as I think 3.64.
So
I mean, that's just crazy.
That's pre-pandemic levels at this point. So what we saw during the pandemic with these, sub 3%, even closer to sub 2 in some situations. That was not normal.
No.
And it's not going to be repeated.
No.
Now, property values have come down, and some areas are also in pre-pandemic levels.
Yes.
So meaning that it's no different than if you were buying a house in 2018-19 now as it is today.
Yes.
Right? So, buyers, this is your opportunity. Let's talk about investors. Obviously, it's something that we've done a lot over the years, and we've got a lot of investors who listen to this podcast. What are you seeing right now from the investment side of things with the market we're in right now? Let's talk about existing landlords right now. Where are the existing landlords maybe feeling the pain? Because I know a lot of them are feeling the pain right now.
Yeah, I'd say the biggest pain is that there's been a surge of rentals in our local market.
Yeah.
A lot of it has to do with developers shifting their plans with a lower real estate market, with pre-sales basically halted.
Yeah.
They've gone towards rental purpose buildings with CMHC financing, and so they are just loading up the rentals that are on the market.
Yeah.
Then we've got the decrease in immigration that's happened suddenly, so there's a lower pool of renters. And then we've got the Airbnb ban, which has flooded more rentals. And then we previously to that had the empty home tax, which also flooded more rentals. So all of this compounding effect has led to, I would say on average, as much as $500 drops in rent per month for landlords.
Yeah. I mean, tenant turnover is probably one of the scariest moments right now for a landlord because of that very reason. Like, if you are cash flowing very slightly, that's almost being wiped out now. And we've had situations where one of our clients, the tenant left back in the fall of 2024. We decided that with them that, maybe a good time to sell the property, put it on the market. We were unsuccessful in selling it in about 6 months, right? The product type used to be high demand, and now suddenly it's
all changed.
It's all changed. This product type, and we'll maybe talk about product types that are struggling right now a little bit, but we couldn't get it sold. So I recommended to her, instead of just keeping it empty, I said to them, put it on the market for rent, get it rented. We'll try it again later. They have been sitting vacant now for over a year and nearly a half now. They finally have a tenant in place. These units, I think they were renting close to 1,900 at one point. They're just small, 1 bedroom, but like under 500 square feet. Now, I don't know what they're getting with the tenant that's going to be moving in. I got to double check with them, but I would hazard a guess it's going to be around 15 if they're lucky.
Yeah, 14, 15.
14, 15. Yeah, absolutely. And so that is exactly what you said. That's that $500 drop in rent and spreads, right?
Yeah.
And unfortunately, the biggest issue that I'm seeing with landlords is that they're trying to hold on to this rent and they won't take less. I see it all the time, and I say, here's the problem. They'll say, I don't want negative cash flow. Well, if you have a vacancy for an entire month,
way more expensive.
Yeah, that entire month is a year's worth of your negative cash flow.
Yeah.
Now, imagine if you sit there and have compounding month after month after month of negative cash flow. Suddenly, you should have just taken that negative $100 to $150 because long term,
yeah,
you're hurting. And so if you're an investor right now and you do have a tenant turnover, here's a couple things that I would suggest, and I'll see if you agree with me. One, have a conversation with the tenant. Why are they planning on moving out? If they're looking for cheaper rent, maybe it's worth negotiating with the tenant to keep them to lower their rent versus having that tenant turnover, because again, that vacancy is where you're going to lose the most amount of money.
Yeah.
The second thing is, if you don't get the market feedback within the first week and a half, drop your rent.
Oh, you have to. It's just like property sales. Mm-hmm. Every week you should be dropping your rent because that's the name of the game, basically. Yeah.
Because the longer it takes you to get rented, the more money you lose. So drop your rents quick, adjust fast, and in some cases, maybe offer some incentives out there too right now. Like, I remember when I was investing in Alberta, we got hit hard in Alberta back in like 2013, 14. Like, we had to get really creative. We were talking like offering, first year of cable and internet for free or something like that. We had adjusted deposit structures to help people get in. We used to do like extra payments on pets. We waived things like that. Mm-hmm. So, if you're finding that there's a lot of competition in your area, your rent alone has to be, it's not just about the rent. It's about what else is going to attract that person to your listing, first of all. So,
and the other thing I want to mention is there are changes that have happened too. Like suddenly tenants are wanting EV charging.
yes.
And there's these things that the property might not have that become a detriment to your rental. Yeah.
And the only thing you can do to offset that is price.
Yeah. Oh, yeah. That's just a trick question.
Price. The only thing you can do to offset that is just your price. So
Find
again,
a supercharger nearby.
find a supercharger nearby. Yeah, I mean, you have to offset it by your price, right? So if your competition is offering something that you don't have, you have to drop your rates.
Yeah.
Right. It really boils down to. But at the same time, while there are landlords that are struggling right now, the market's not great from being a landlord perspective. There is a shift happening where it could start to get better for those who are looking to be new landlords. And it comes in the fact that we are seeing cash flow in certain markets start to come back.
Yes.
Right. So
because the prices are dropping and the interest is dropping. Yeah.
Exactly. So areas that we used to sell all the time, Chilliwack, Mission, Abbotsford, suddenly we're looking at these properties, and a suited house now suddenly makes $300, $400, $500 a month cash flow. And that's trying to be conservative on the rent as well.
Yeah.
And the expenses. So while existing landlords might be struggling right now, new landlords or investors who want to take advantage of this market, there's opportunity.
And in all fairness, I've been hit with several vacancies lately, but one of them I was only vacant for 15 days. And I got very good quality tenants with 2 collies. And because I've owned the property a long time, and the last tenant was there for 6 years, I'm actually making positive cash flow now. So, there's one-off situations that are still good if you have the right product in the right condition.
Yeah, absolutely.
Yeah.
So I would say if you guys are an active investor, you've got equity that you've been waiting for the market to turn. It made no sense why investors were going gangbusters, paying $200,000-$300,000 over asking price, trying to compete with the emotional buyers, even though we all know those investors were the ones to blame for the market, according to the government, right? No, it was the emotional buyers that were driving it up. Go out now, because like the first-time home buyers, like the upsizers or downsizers, you can actually go and put strong offers in where you can negotiate. Then you can go back on items for repairs or inspection issues. Like, this is the time when investors should be taking the most amount of action in the market.
And there's also the odd vendor take-back opportunity where you're able to get some seller financing or entire seller financing because people just want to get their property sold.
And we haven't seen that in...
ever.
Yeah, yeah, basically. I mean, since I've started working with you, I mean, there's only been maybe 2 vendor take-back mortgages that I know of, and you were involved in both of those.
Yeah, there was one before you started, I think.
Yeah, so, I mean, we've been working together for 13 years now.
That's
so,
right.
So it just goes to show that, like, some of these markets these opportunities don't come up very, very often. So while they're there, go and take advantage of it. And it's even popping up with conversations with regular sellers. We had a conversation with one of our sellers recently, and they are the ones who even brought it up, which is shocking sometimes, because I feel like we should be the one to think about this. But because most people don't know about these, and it's kind of confusing, sometimes we don't necessarily lean into it right away. And he goes, well, what about if we offer vendor financing? We have no mortgage. I go, yeah, that's a great opportunity. Obviously, we didn't end up needing to do that. We did find a buyer that's buying it without needing the vendor financing.
Money, yeah.
But we definitely got a lot more inquiries because of it. Like, it definitely increased the activity on the property.
Yeah.
Okay, so let's talk kind of some headlines here. What's been going on in the markets right now? A couple major things has been, I have not talked about it yet on the podcast. And I feel like this might be the good opportunity as we head into 2026, indigenous land claims.
Yes.
Right? I've kind of avoided it for a little while. I know a lot of other agents have been talking about it. I feel like we've got enough information now for us to form a better response for the listeners of the podcast. So what's going on right now with the indigenous land claims, and what's your take on all of it right now?
Well, I've heard some speakers, give information on the topic. I've also spoken to about 3 lawyers that I trust quite a bit, and really, to me, my sense is that it's another challenge that's a bunch of noise that takes us away from our focus.
Yeah.
It sounds like it's going to take a long time to resolve, as long as 50 years to resolve. It's not going to be an overnight fix. And so I'm not as really frazzled by it as I initially was, mostly because the people that I've spoken to that are very, very knowledgeable have just said, well, it's going to have to work itself out. And
what you were just saying there is very, very important, is the noise aspect, right?
Yes.
Because like everything that we've seen, as it comes out, it comes in headlines with no information. And what's really happening is that you've got buyers and sellers that are making decisions with no information. And this is exactly why I took my time with bringing this to my platform here on the podcast, because within the days of the decision, you saw so many real estate professionals talking about it with no information. And so now we've got the information that obviously this is not a done deal. It's not, when our court systems in Canada, it's not that when one court suddenly makes a ruling, it's now law, right? We have other additional levels of government and courts that this has to go through. So the next step is to send this to Court of Appeals. Well, we all know the court systems in Canada are not fast.
Very delayed.
All right, and then when you're dealing with anything like this, it's going to get delayed even further. So the fact that some of these lawyers are saying this could take even up to 50 years for it to actually be resolved, whether it be ratified that yes, they do have the land claim, or no, we're going to reverse the decision of the courts in the lower courts, it could take years and years and years for that. Now, obviously, headlines are where people make their decision on. And we as investors, we as buyers, sellers, we have to get beyond the headlines. Don Campbell used to run RAIN. He used to say one of the best things that I totally loved was what's beyond the curtain, right? So you have to actually go deeper into what's actually happening and how it's going to impact you. So again, I don't want to dwell on that too much. I just wanted to bring that to fact because again, I think every once in a while we're still seeing things pop up and people are still having this conversation. It's not your homes in Coquitlam and Poco and everywhere. They're safe for now, right? Don't make your decisions on something that may or may not ever come. Focus on what you can do right now to get yourselves in a better position financially. So,
yeah, absolutely.
All right, let's talk about interest rates a little bit. We had Tim Lyon come and speak at our last Investors Performance Group. He gave us a little bit of a heads up on what he thinks is going to happen for rates in 2026. You guys can, of course, go and check that out over on my main channel, youtube.com/Cameron Manning. Just click on the live tab. But what are your thoughts for rates going through 2026 based on everything we've been talking with the brokers?
I mean, we're really at very low rates now. I think that we'll be lucky if we get 1 or 2 0.25 rate cuts further, so a half a point at best, I think, this year. And if anything, they could go up as well. It's always a fine line with the strength of the economy and how much inflation is happening. And so, I'd love to see rates drop because there's like a 60 days later, we get a little bit of activity in the market and,
maybe help one of our sellers out to get sold.
It could definitely help our listings, but, and it also helps buyers too if there's a rate drop.
Absolutely.
But they also have to walk that line with inflation. And so I am hoping that we see a quarter point. I'm on variable myself at my house, so that'd be great.
Another little rate drop just eases things up just slightly there.
But I think what I've seen the mistake with sellers make is after every rate announcement, they're waiting to decide on a price reduction. But the market was dropping fast anyway, regardless of rates. And, they have to be careful and realize that they have to be competitive with what they're offering on their listing for them to get a sale at all, regardless of the rates.
Yeah. So. Yeah, I hear you. I think the key thing here is the key word in all categories right now is competitive, right? Yes. This is a highly competitive market and not like it was competitive in 2020, 2021. So it's a different competition.
Yeah, it's a different type.
Right.
That was, you were competing if you were on the buy side for your life with 30 offers. Now you're competing with other listings trying to get a sale.
And I know we talked a little bit about it, but I do want to circle back to that right now. Like, what are 3 pieces of advice you could give to a seller right now thinking about selling and like from a marketing perspective? Well,
the biggest part of marketing is price. Yeah. And I think that if sellers always want us to market heavily and do all these innovations, and we're happy to do that, but marketing an overpriced listing doesn't result in a sale.
Yeah.
So price is the number 1 most important attribute.
I mean, I think to that point, at the end of the day, you're not just pricing it, like you're pricing it to get the most amount of eyes on your property.
Yes.
Right? And we've seen it on our own listings that when a seller really does not want to take a price that we recommend, we price it closer to where they're thinking. The property sits. It gets
We
no
don't
activity.
get showings. We don't have offers, and nothing changes it until the price changes.
And they sit there. And this is not the first time. We've had several conversations with several sellers where they go, well, why are people buying those properties and not looking at ours? Ours are very comparable. I said, well, because they look at your price and they decide not to look. Like, everything starts online, and that includes the price. So if your price is too high, then they're just going to skip over the listing no matter how beautifully staged it is. Like, you can't overcome the price. All right, what's another, maybe kind of what I just mentioned there, staging.
Well, I think what we're seeing also is that buyers want renovated properties.
Yes.
Now, there's issues there because the renovation has to match what the consumer wants.
Yes.
But a more modern renovation is definitely what the buyers want. If the property is not renovated, they are going to want a much discounted price to compensate for that, if they even have the capacity to figure out how to get it renovated.
Yeah.
So neutral colors are critical when you're selling because you're appealing to a mass of different types of people with different tastes. So any kind of extreme colors, extreme design, extreme clutter, anything like that will prohibit the sale. So proper, clean, neutral, staged property is the best.
Well, not only that, you just said it too, staged, right? We've seen time and time again, we're looking at photos and, again, if you're selling a property that someone else is living in, tenant occupied, a little bit of a different scenario. But if you are living in the property and you're selling it, you have to do the work to prepare it. So you need to have a stager come in. You need some work because you don't know how buyers look, right? You just know how you've lived. And it has to be neutral. Remove all of the family photos.
Oh, yes. And, with one of your listings, you got those couch covers that cover the big floral couches because anything that's shouting out at the buyer that they can't, mentally feel right about, we have to address. And it's a simple, inexpensive fix.
Yeah. I mean, and then from there, final piece of advice, let me know if you agree with this, is you have to be super open to access. I think that there's a lot of times right now that when a buyer is available, they're going to choose on their schedule.
Yes.
And you as sellers go, oh, well, that doesn't work for me. Guess what? That one person might have been the buyer for your property.
Yeah.
And you now just shut them down. They're going to go buy somewhere else. And so showing availability is absolutely key. The amount of times that we have been booking showings, and I'm gonna lay this one out here and you let me know what you think, is not just the seller's availability, but the fucking agents' availabilities.
Yes.
My God, agents, if you're watching or listening to this, put your properties on a lockbox. I know it's going to be like, I'm going to get probably reamed in the comments for this, but if you're not available, you're hindering your own sale because you're relying on you showing all the buyers agents. You're just hurting yourself.
Well, and I don't know why there's this perception. Obviously, a very complicated, unique property may need us present.
For sure.
But with high volume of listings, it's not realistic for us to be at all our listings at any given time.
Yep.
And if a realtor's driving by with their client and they spot your sign or they see it on their phone, on their app, and they want to get in right away, it's crazy not to have a lockbox on site where we can approve it, check with the seller. If it's vacant, it's just automatic. We allow them. It's the difference between getting a sale or not.
It drives me nuts because at the end of the day, when you're putting your tour together to work with your buyers, and this is a buyer's market, so you should cater to your buyers.
Yeah.
And you get that response back from the agent, oh, can you do it on this day because that's when I'm available? No, that's when I'm taking my clients out. That's when my clients are available. Yeah. We'll pick one of the 4 that actually let us in out of the 7 or 8 that we book. So if you guys are listening, you're an agent. I know we got lots of agents who watch this. Invest in lockboxes. Make your properties a lot more accessible, and you will actually sell more real estate in 2026 using this one thing. Honestly, make it more available. All right, Kelly, we're going to wrap this up here. So let's just talk generally. What are you expecting to see in 2026 going forward so people can really understand what people in the field every day are starting to feel out there?
Well, I think as, the impact of all the rate drops continue, I think we're going to see a little bit more stability in 2026. We're not going to see any big upward swings by any means. We could see an increased concentration of listings beyond what we're already at. However, for those properties that are priced right, that look good, that have an excellent agent like us on the listing, making sure that every call is answered and access is easily given, they will sell. Yeah. And so, the media is going to portray the fact that we have record levels of inventory, but when you're actually shopping with a buyer for a specific property in a specific price range, it's really almost alarming how few options there actually are.
Yeah, absolutely. No, I agree. Yeah, I mean, I think too is that, as we go through 2026, we're going to have a compounding effect of the lack of development that's going to start to happen. So that's going to start to impact. This isn't going to be felt right away, and I think that's a mistake a lot of sellers are making. And I agree, I think we're going to have a significant jump in inventory probably through the springtime, just based on conversations. I'm going to wait till spring, I'm going to wait till spring, I'm going to wait till spring. I think we're going to see maybe some downward pressure continue through 2026, and eventually we'll come out of that, and we will stabilize through maybe mid to late 2026. I don't think we're going to see any property gains until, mid to late 2027. So, it's going to take a while for demand to really absorb all this inventory that we have. And then from there, it's going to be a matter of, the immigration picking back up. Well, immigration's not gone away, right? We still have immigration happening, just at lower quantities. Eventually that will absorb if we're not building enough. And then eventually we will see a market rebound. So make sure you guys keep that in mind. Do your own due diligence research, talk to your advisors out there, make the right moves for you. But the key thing is don't dig in, right? Make sure you're flexible, because that's the people who succeed are the ones who are the most flexible in the market. You're going to maximize what the market will do today. We don't know how long this market is truly going to be down. It's a crystal ball, but take the right action and you will be able to come out this on the other end successfully. Good luck in 2026, guys. Keep tuning in to the Manning Up on Real Estate podcast. Kelly, thank you so much again for joining me here today.
It's always great to talk with you.
Let me know in the comments. Should we bring Kelly on more often onto the podcast and get her perspectives on here? So drop it in the comments. Yes, more Kelly. And again, don't forget to subscribe to the podcast, like it, and share it with anyone looking to buy, sell, or invest in 2026. And we'll catch you guys on the next one.
On the flip side.